Good day traders, welcome back to our weekly market fix. I trust all of you had a great week in the markets and that some of you were able to get on board some of the trade setups that we put out last week and which we will also be briefly reviewing in this week's video. For those who might have missed it, we have started sending out individual trade alerts on both our Twitter and Telegram channels. The links for both of those can be found in the description below. Now let's get right into those charts. So for this week, I think it would be best if we start by quickly reviewing some of the trade setups that we put out throughout the week. And for those who have not seen our previous setups, remember we do put out our trade setups on a daily basis throughout the week. You can see those on our Twitter page as well as on our Telegram channel. So if you would like to join either of those, the links would be in the description below. Firstly, let's have a look at the EURGBP trade. So we had an entry in the blue area. Of course, at the time that I put the trade out, we have already passed the blue area slightly, but you can see how well the trading very quickly reached the first target at 0.860. From there, it then hit the full target almost within the next, 3 hours or so. It did hit the full target at 0.864. At this stage, it has now pulled back. You can see all the way back into that entry zone. Looking at the next setup we had was for the GBPNZD. We had our entry zone again in blue, and then price continued onwards towards the first target at 1.958. It did not reach the full target as yet. It is currently still trading back in that entry zone, as you can see indicated in the blue zone. Currently, it seems we are testing that 200 daily, that's the 200 1 hour moving average. And from here, I'm still expecting a move higher towards that full target, which coincides with the monthly pivot at 1.965. The other trade that we had was on the NZDUSD. This was a short trade. And let's just see if we can get a closer look at this trade. Anyway, so what you can see is we had a short trade. The entry zone was in the blue. The stop loss is the top end of that red zone. So we never hit that, and it reached the full target at 0.690. We also had the USDCHF trade. This was a long trade. We had our entry in the blue zone, and you can see that what happened was it very quickly reached the first target that was set at 0.926. From there, it then pulled back into the entry zone, after which it continued upwards and reaching the full target at 0.932. At this point, it also seems that we have had a pullback and a retest now of this the 200 1 hour moving average. And just zooming out to the daily, let me just quickly rescale the chart. So what we can see is we had this consolidation in the form of this symmetrical triangle, from where we had a breakout, excuse me, and then we had a retest. And for now, I'm seeing that we could potentially be looking for a continuation towards the full target, which would be all the way up at 0.947. But for this week, at least, I'm looking for a test of these previous swing highs around about 0.933. Having a look at some of our other Forex setups for the week, if we have a look at the USDZAR, we can see that it has now found some overhead resistance from that diagonal, and that's just going back all the way to December of last year. And we have also previously identified this as a resistance zone. So for this week, there's a good chance that we'll see a pullback, perhaps to this 1470 level. That is where we have our daily 50 SMA. If it does break below that level, I suspect we'll have an even deeper pullback, sending a price to the daily 100 SMA, currently residing at 1443. In terms of resistance, if price were to head back up, I think it will find some resistance at this 15 Rand to a dollar psychological level. Looking at the EURUSD, we have covered this pair extensively in our trend evaluation method video, where we actually explained how we identify trends and the different phases of a trend. So currently what we are seeing is we are in phase 3 of this new bearish trend, And what happened is that we had a pullback and then we had a rejection. We have now currently broken below previous lows, meaning we have again broken below structure. And how this phase that we are currently in, phase 3, typically plays out is that we will have a move lower, breaking previous lows. It will typically find some support from either the diagonal channel or any important or major level of support. In this specific scenario, I suspect it could be a move to about 1.154 for this week. And what we can do is we can just have a look at the weekly pivots. So you can see we have the S1 weekly pivot at 1.153. So what could be happening this week is that, sorry, I'm just going to collapse that again. We could see a quick move down towards that area and then a rejection, sending price back to retest price structure somewhere in the vicinity of that 1.170 to 1.178 area, after which it will then likely then continue down, breaking below the previous lows and making new lows as it goes along. Looking at the GBPUSD, we see something very similar to what we see on the EURUSD, also a break of a structure. What we also have on the GBPUSD is this very large head and shoulders pattern that we are expecting to play out at some point over the next few, let's say, weeks to months. At this point, I do expect that we will likely still see a pullback, perhaps towards this area of the 21 EMA, that's indicated at that 1.365 area, and perhaps even a pullback towards the 50 daily SMA at 1.374. From there, of course, I will then continue or expect rather a rejection, sending price lower, breaking below previous low, and continuing onwards until it eventually reaches that target. Let's have a look now at the EURCHF. So the EURCHF, and I'll again have to zoom out quite a bit to something like the monthly, where you can see there is a very large head and shoulders possible continuation pattern that it could be in play. And as you can see, we have very low targets for that set up, and that is something that might play out over a span of a few years. So not really relevant for the week, but I still just want to show you that. At this point, it appears that we are in a bearish trend. We are trading well below our major moving averages. As you can see, we're trading below the 50, the 100, and the 50 at this point. So what could be happening is we could have a slight pullback this week to about 1.082, from where we see a possible rejection. And as soon as we break that 1.077 level, be that directly or after a pullback, I suspect we'll see another move lower towards that previous lows at least 1.069. And then finally, moving on to our indices, I did put out a caution as well last week, where I mentioned that price is currently trading in precariously high levels, and then I did mention that we are also appearing to be running out of momentum. At this point, there is something that resembles a head and shoulders pattern that could be in play. We have very strong overhead resistance now from the yearly R1 pivot as well as the monthly pivot, both sitting at about 15 to about 1550. So 15,000 to 15,050 would be an area of overhead resistance at this point. So if price moves back into this area, gets rejected, I suspect we'll see a move lower, making new lows. Probably for now and this week, a good place to be targeting is this 14,440 level. That is some diagonal support, as well as the monthly S1, or at least close to it. If it does break below this level, there will be support from the daily 200 SMA, which coincides with the monthly S2 and previous highs, all sitting at that 14,050 level. Looking at Brent crude oil, we've previously shown that there was a breakout from this consolidation. We then saw a retest of that breakout, and currently we can see price moving higher. We had a brief retest on Thursday, which actually tested that level of previous resistance, which also is this month's pivot at 76.40. So for this week, there might still be some consolidation, but as soon as we take out the highs from last week, I do expect the price to continue higher. We have some resistance zones, and this is probably not only for this week, but for the next few weeks. Resistance zones from the monthly R1 and R2 at 82.42 and 86.83. In the event of a deeper pullback and a break below that monthly pivot, I suspect we could see a test of that breakout level again, currently sitting at 73.07. Looking at gold, gold has at this point still not managed to get back above that long-term diagonal, and I'll quickly show that to you on the weekly time frame. So you can see we have had this diagonal that we've been tracking. Gold has broken below it at this point, but I'm not so sure whether we will see continuation lower. As you can see, we do appear to be finding some support from that weekly 100 SMA. This is the blue dotted line that you can see on the chart. So if we head back to the daily, we can see that we have some immediate resistance at this level of our monthly pivot. That's 1,770. And I do suspect that if we can take out that level and see price head higher, we might be testing at the daily 100 and 200 SMAs again at 1,800, which has been a key level in the past as well. If, however, we do see a break below, where we have support, 1,745, and I believe that was one of our weekly pivots, or at least very close to it. So we have our weekly pivot at 1,750. So if we do see a break below that, there's a good chance that we will then look for support further down, about halfway into that shadow from that low. And I see there is definitely some confluence of the weekly S2 and monthly S1 at 1,707. And finally, let's conclude by having a look at Bitcoin. Bitcoin, as we've previously pointed out, has now broken out of that small bearish trend where it found some support from the daily 100 SMA. And I did mention that I am expecting one last move higher, at least for the interim. And at this point, we can see we have this very big liquidity zone, supply zone in this instance, as just above the previous highs of September, and then that will be sitting between 48.6 and about 50,000. So if price pushes back into this area, there's a good chance that we'll see some sellers stepping in and some of the smart money or the big holders taking some profit, and that could be sending price lower then towards support from the yearly R2, that is at 46,150. If it does break below that level, there will be a much deeper sell-off, of course, and then I will be looking for a move to about 41 to at least this area in green, where we have our yearly 365-day moving average residing just below 40,000 at about 39,200. We hope you liked this week's video. As promised, last week we will be concluding each video now going forward with a pro trading tip. So for this week's tip, never risk more than 1 or 2% of your available trading capital on any individual trade, and never risk more than 3% per day. Until next time, we wish you all the best of your trading. Remember, trade smart and trade successful.